of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And we're up 13 points on the S&P cash at 2649.82 is what I have for the last tick. When we look at the Dow up 94 and the NASDAQ up 35 or 36, somewhere in there. And, of course, going to start seeing volume start to decrease. We talked about that this whole week. We certainly got that today, just 1.8 billion shares as we start the show. And, of course, just a few days ago, we had some of the biggest volume this entire year. And that's not uncommon. You get that sector rotation. Normally, if you have something like the tech sector, which has been outperforming for several years, you will, on average, a sector will outperform the rest of the market for 3 years. And then it'll go sideways for a year or two. And then if it still has something left in it, it might start up. But there's a lot to be thought that at least all the stocks that had the huge runs will have consolidation in the next year. And you'll see what the big guys of Wall Street selling some of those and putting them into other things, faster horse for next year. So most of what I'm doing now is all looking for the faster horse for next year. I think we found a few of them. I found a lot of long-term ones. Short-term ones are a little tougher to find right now because, of course, political news. You never know when the next North Korean nuke is going to fire. But on the longer-term basis, if the planet is still here, I think we found some very good ones for the Tech Insider. But we've also seen a lot of these stocks pull back, and some of these things are going to be, I think, very important next year. We'll talk to Tom O'Brien at the 3:30 time slot again today. A lot of interesting tech news after a few weeks that has really been, I'm going to say, boring. They're just, why the stocks moved, there wasn't a lot of there in the underlying news. But it's starting to heat up, and we'll actually have a lot of tech news actually through about mid-January. And a few other things happening. Anyway, don't expect a lot other than slowly watching these stocks creep up all the way through Christmas. Really, we're probably going to see the big moves next week as we go into options expiration. As I said, on Wednesday, that, man, everybody and their dog was getting and wanting to go south. And that was a great indication that these stocks were ready to bounce going into the end of the year. And, of course, now you're going to start finding out a lot about what's going on. If they can drive these stocks up on very little volume all the way to January 1st, then maybe you'll have a little drop come in it. Right now, I don't see that. I suspect a lot more. The theory is going to be that we trade sideways on the stocks that outperformed this year. And then we're going to look at other stocks that either pulled back on light volume being bought at the very beginning of the year. So we'll take a look at that. As always, we'd like to start the show off with a little bit of history.
Then it's all just a little bit of history repeating.
It is nothing but history. On this day in 1914, a month after the German naval forces, led by Admiral Maximilian von Spee, inflicted the Royal Navy's first defeat in a century by sinking 2 British cruisers with all hands off the southern coast of Chile. Spee's squadron attempted to raid the Falkland Islands, located in the southern Atlantic Ocean, only to be thwarted by the British Navy. The battle represents one of the last important instances of an old-style naval warfare between ships and sailors with their guns alone, without the aids or interference of airplanes, submarines, mines, and everything else. And, of course, kind of the beginning of the end of the battleship and the rise of the aircraft carrier on this day in 1914. And one of the reasons why England has, of course, the Falkland Islands. Of course, Chile, Argentina, some of these other ones. Man, I don't know what they have in common with the Germans, but even when Germans were defeated, the Nazis hightailed it down there to Argentina and Chile. Never really got the whole idea why they're so popular down there, but they are. Anyway, on this day in 1914, not much other news going on in the market that we're going to talk about now. We're going to look at charts, but we'll get into a lot of other things. Heard our good friend Steve Rhodes talking about NVIDIA. Little pop-up here on light volume. Kind of interesting that they released a very nice video card today, one that I will lust after for many moons. A little Native American language there for you and Lutz. But we've got a nice little bounce here. At least it came off that 180.84 low, and they're probably putting a bottom in for the year for these SMHs, even on their sold. The video card's like $3,000, but it's 9 times faster than the one that they originally sold for $2,000 last year. So quite a quantum move for NVIDIA, but we'll see. It's another $1,000, but they don't even have, a lot of those cards, they have the ability to put 2 or 3 or 4 of them all in one machine. This one, nope. You just stick one in one machine and that's it. So kind of a different approach for NVIDIA on this big one for machine learning and artificial intelligence. And, of course, a little bounce out here kind of gave it back. It's on a Friday, but my guess is we're going to continue to move up into this big candle down in the SMHs from the 29th, and we'll be looking at that. Okay, so what else do we have? I'm going to look at a few of them. Again, pretty tough time of year to be short, highly shorted stocks. You're probably not going to get these things to break out, but at the same time, I don't understand if you're a trader like us and not some big house that's sitting on BlackBerry for 100 years until it goes bankrupt. The whole idea of just sitting on this thing, but it's kind of back up here into fairly stiff resistance of 37 million shares. Last couple of days, we've had 8 million shares. Again, a lot of people short this thing, probably shouldn't be shorted going into light volume. Maybe you get a little bounce out here. But again, kind of tough for me to think that you want to be short a lot of these highly shorted stocks as we go into the end of the year. We'll be back. We'll look at some other ones like Tesla and Snap. But you got to know your short sales numbers going into the end of the year, especially on these high flyers and ones that are always going across the ticker on CNBC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Tesla, another one of those highly shorted stocks, probably going to drift up all the way through the end of the year. Up a little higher out here, not much action. But again, everybody short this thing. Look for this thing to break out probably on Wednesday. I think this thing can get above the 326.67. So not a lot of money in it, but a little bit. But my guess is this does break above that November 17th high before expiration next week by looking at the options. A lot of people on the wrong side of a couple of these. Another one is Snap, S-N-A-P. This is the third day on this one, kind of breaking up and out, and it's holding up. Not a lot of volume, but still suspect that this one sees that 1688 by next Friday into options expiration. Again, just a lot of too many people on one side of the boat, and all it takes is a handful of shorts to start covering to cause more of a short squeeze. And the news flow on this is really not that bad, so we're going to look at that. One of the sectors that I think is going to outperform next year is the IBB. It's up $2. Of course, triples, 1 for 3 split. And I wonder always how many people see those and they go, it's down 2/3 this morning. I better jump off the balcony. But didn't hear too many people squeal this on that split. I think it's big enough that everybody figures it out. It's those 50% splits that people worry about. And of course, you're never really going to get those on an ETF with that many stocks for the most part. Short of a nuke, that's about it. Anyway, nice move up. Not a lot of juice out here on this one. But again, not a bad looking chart. I would love for this thing to kind of come back in the first part of the year, back down to 167, the November 15th low. But it may not do it. This one a little cantankerous. But I suspect by mid-January, this thing's probably going to see some kind of low, and this one may be one of the big outperformers next year. Got a quick question about my comments on the GLD waiting for a breakout. And yes, this is what you're looking for. Remember when I said we were looking for somewhere around 118 to start looking at gold? Let's go ahead and redo that once again. Let me get this a little bit better looking here so everybody can see. And I can draw on this GLD chart. But we've been talking about these asymmetrical triangles. And for the most part, this thing kind of looked kind of like this a little bit. You basically got to the high side of it. It went around and turned down. We now solidly have broken below that triangle formation. And 80% of the time that you do that, it's a head fake. So actually, what most people would think is a horrible looking gold chart, not that bad. Now, a lot of these have turned into Gartley patterns. And we want to look at those. Okay. SpaceX into Tesla. I don't think they can absorb it, and I don't think that they want to. Somebody in the den saying that SpaceX gets wrapped into Tesla. I don't think that they'd want to do it. I think if I was a shareholder in SpaceX, I would scream to holy hell if they stuck me in the two losers of Tesla and Solar City for the one really good company out of the three that basically at the point of actually making money. In fact, I was watching a special with the guy that wrote The Martian, the movie, and both a space shuttle pilot and a Mir pilot that was on the ISS for 6 months. And kind of interesting. They both said the same thing, but the guy that wrote The Martian had the best one. He goes, "We're not going to Mars anytime soon. If by the time you got to Mars, your cancers would have cancer cells of their own attacking them." They still haven't figured it out. He basically stated that they had some kind of magical formula for putting shielding in the spacesuits, and that actually the wind on Mars would feel at 100 miles an hour like a gentle breeze, because the atmosphere is only 1/100th of what it is here on the Earth. So there isn't going to be a big sandstorm that knocks your rocket over. But always kind of interesting. But I always love that. Your cancer would have cancer. Anyway, I would scream to holy hell if I was in SpaceX as an initial investor, unless I was thinking that this was my only opportunity to get out quickly without having to go to market. But I think it's the best company that's out there now. And of course, in a war of words last night with Boeing about who is going to be first to Mars. And I just don't see how Boeing really cares about it. I think they're going to be making lots of hypersonic planes and missiles and 787s and lots of other stuff. For them, they're turning away business in the airlines right now. Why should they get into a dog-eat-dog business launching satellites? I don't think it makes a lot of sense when they've got a market cornered to go into a loser for them right now. So I would say, don't do it, Mr. Tesla. Don't do it. Anyway, we're back to gold here. I wanted to take a look at a handful because if you get or use the Art of Timing the Trade software, you get these every day. So I did want to actually show these. Where are they at? There they are. But we've got some fairly decent Gartley patterns in some of these stocks in the gold market. Go ahead and take a look at this one here. Come on. What's going on? We're waiting. There we go. A nice bullish butterfly, 2463 was the bottom you were looking for on a bearish or bullish butterfly. You got that and a little more yesterday. You popped right back into the range today. So actually some fairly good looking charts that we think there were a handful more. Let's see, that was the Gartley for then. Here's the Gartley from yesterday. GDXJ. A lot of these ETFs all have almost the exact same looking Gartley bullish butterflies out here with the fairly decent ones. Now on the GDXJ, you were looking for $30.18. You got $29.84, and then the bounce back into that right now. So pretty much a perfect pattern. I do like the fact that the energy from the C back down to these Ds was a little lighter, but I'm not one to always be playing gold. But when I do, it's Dos Equis. No, it's on these super straight stretched patterns. We'll talk more about that when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we'll look at the last one, which is GDX, which is the last of these Gartley patterns. But the C to D's, basically what you're looking for. And the target on the bullish butterfly was 2105 on the GDX. You got to 2140. So that one's actually a little stronger than the others for the prediction. It didn't have as much in the way of the B to C retracement, only 43%. But all these kind of set up this way. So Monday, if you come in and gold's feeling a little froggy, it might be time to jump. Let's go back to some of the other stocks that we wanted to look at. We already looked at the SMHs. Okay, what else do we have? I want to look at some other ones. Western Digital finally solved its deal with both Japan and Toshiba, but mostly Japan. They became fairly big creeps, and Japan wanted nothing to do with Western Digital. Through a bunch of yelling and screaming and acting like petulant children, Western Digital pretty much got themselves on the outs. They have to have some kind of memory supplier at a decent price for them to actually to continue as a ongoing business. And they've actually got that today. Finally made a deal with Bain and Toshiba and the Japanese government. Not a great deal, but at least they're not out of business. And that will continue on, and that's why that one's kind of bouncing a little bit out here today. Some of the other ones, like Avago, some of these other supply chain stocks getting downgraded, and also unhappy with sales going on in Apple's product line, both on the iPhone 10, which is not a good sign. In fact, let's take a look at Apple today. No big signal there, just to pull back. A little bit of a reversal out here on Apple. I don't expect this thing to fold before Christmas. It's just too close to the highs, but it doesn't seem like this one's going to go a lot higher either. The signs are that sales are not all that exciting, and they're actually probably cutting a little cash on some of their other products to get their numbers up. Electronic Arts, wanted to look at some of these. Some of these are just bouncing off problems. If we were looking for stocks that could go lower next year, Electronic Arts, Activision, some of these other companies kind of whiffed with new games. Either they weren't great or the companies botched the rollout of them. Electronic Arts botched the rollout, and with the new Star Wars game, this is up a little bit, but it's been coming down for a while. Of course, Star Wars starts a week from today, I believe. And let's take a quick look at Disney. See if we're getting any indication of whether or not this new Star Wars movie is going to be a turkey. And well, I mean, he had a huge pop up to 112.67. This one's pulling back a little bit. I don't know. Everything I've heard, I started to look for reviews today to see, because this is such a huge, this is going to be like $1.5 billion, $2 billion for Walt Disney with all their marketing and tie-ins and everything else. The question is this movie going to be one that anybody's going to go on to see more than one time? And the problem with Disney movies is they tend to be homogenized, so that they aren't great like the original, one or two or three. They tend to be good enough that everybody's happy, but not good enough that some people come back and watch it like 3 times. Not that I did, of course, in 1978. But it's one of those things where you have to look at it. But, man, firing directors, changing scripts, this hasn't been an easy movie. And when I look at companies like Electronic Arts also kind of foundering on their launch of their games, this hasn't been as clean as things in the past. And the question is whether or not this is going to be a good one. The stars of the new Star Wars sequels are not rememberable stars. I don't see them in any other movies. The new girl's probably the best, and I'm going to say that she's fairly average from the movies. Just very tough to figure out how any of these things develop to the level of the movies that I had when I was a teenager and into the 80s. It's hard to put lightning back in the bottle yet a second time, but I don't know. All the indications are that this could either do okay or be a horrible miss. And that is where, if we're going to get any kind of action, probably going to start seeing reviews for the movie and that movies in Disney probably Wednesday. I know that they have an embargo on most of them, but if you start seeing those reviews and they start coming out and saying it stinks, then you probably want to look at exiting Disney if you're still in this thing. It may be a wicked Christmas for them if they whiff on something they paid $4.5 billion for. Taking a look at some of these other stocks that have bounced. WP Glimmer Incorporated, Glimmature. Interesting pattern out here. I do like the bottoms on this one. November 7th, $6.71, 5.26 million shares. We got into it with just 3 million shares, or almost half, on December 6th. Yesterday, you even had less. You had 2 million shares. Now bounced back into the trading range. So this one could get back up to about 780, which would be kind of a nice run out here. A lot of these stocks are going to be stuck. And so any of these things that tend to move a little bit better are going to be interesting. Some of these other stocks, a little less so. You do have some temporary bottoms in these solar stocks. VSLR is one of these. It came in with about 150,000 shares lighter than its September 26th low on December 6th. But energy down's about the same on the way up. Now, the one that has kind of interesting to me and why I think that the IBB might be setting up for nice runs at the very beginning of next year are a lot of patterns that I've seen, like Vertex Pharmaceuticals. You had a huge run and huge bounce up on July the 19th. You came in there with almost 17 million shares, got to the high with 16.8 million shares on July 25th. This thing has been making lighter and lighter pullbacks all the way into this gap that, of course, had almost 17 million shares yesterday with this 1.8 million, 1.7 million shares, 1.6 the day before that, 1.4 the day before that. Now a nice pop back into the trading range. And, of course, we've got the IBB up a little bit. But there are a lot of stocks in this biotech sector looking like this. These things may muddle around till the first of the year. But if they continue to look like this, they may be the rocket ships of
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We've talked about this stock before, which is Digital Realty Trust. It's the one thing that has me kind of nervous in the short term for the Silicon Valley stocks. This one, of course, rents a lot of property from anything from startups to actually the place to go ahead and put in your own web server farms and everything in San Francisco and your cloud installations. But this one, of course, when this thing rolled over, I figured that we were going to start being in trouble. Now, this one's come down a few times with some huge, nasty candles. In fact, just a few days ago, back into the low, and it started to move back up. This is probably in some level of consolidation. Again, this makes me think that why it couldn't bust out the bottom, that you do have the opportunity to set up a kind of a trading range in some of these FANG stocks and some of the other Silicon Valley stocks that have been high flyers for the last year. Probably going to find other stocks that didn't run last year or that pulled back significantly. And as long as this thing does not, it just consolidates out in this 112 or 110 area to 125, 127 area, I think you're going to be okay. What you really want to watch now is whether this thing ever breaks below the 108.73. That's the July 6th low. If this thing starts acting squirrely on you, then we could start having a much bigger problems in the techs. Again, this is just some wild tummy troubles right now. Pretty much, though, you had a huge volume and energy off the September 11th high back down to the September 27th low. You kind of get this last run from October 20th back down to December 5th. Had a little less energy than that one did. So I'm suspecting that's setting up this trading range that we're going to see here for a while. But again, you got the numbers where you really need to start worrying. And on the SMHs as a whole, and tech not just being in a consolidation below the recent highs, but actually blowing out those highs and moving significantly lower below that July 6th low at 108.73. Cone also sold off, C-O-N-E. Cyrus 1. Let's move this one here. Let me move a few things around. Do I have it out here? Make sure I've got it. Cirrus One is a real estate investment trust, owns, operates, and develops enterprise-class, carrier-neutral, and multi-tenant data center properties. The company provides mission-critical data center facilities to protect and ensure the continued operation of information technologies. Yeah. The one thing that I like about Digital Realty Trust is how close they are to Silicon Valley. Cirrus One also the same kind of thing, but they're all over the world. And what I'm figuring, or at least I'm speculating, is that the startups will be the first to be hurt because that cash goes away the first when everything starts heading south in tech land. So why this one's got a kind of a similar pattern, it's actually a little stronger than that. I look at the other one just because, to me, it has a lot more exposure right in there to Silicon Valley. So same kind of things. It's just that Digital Realty Trust does and works with a great deal more startups, and they're going in and out of business all the time. So, you can be here today and they're going to have the place rented. Tomorrow they won't. And if there aren't a lot of people standing in line right behind them, that Digital Realty Trust is going to be the first one, I suspect, to blow up. Cirrus One, much bigger and better diversified across the world. Okay. And see if there's anything else. Check some emails here. Okay. What do they want me to look at here? Talked about that one. Talked about anything else? Okay. Just before the show, of course, we had the numbers come out for, what was it, for the, I posted them here. There they are. U.S. rig count increased by 2 to 931, rising for the fifth consecutive week. These are the Baker Hughes numbers for oil and natural gas. The rig count rose by 2 to 751, while the natural gas rig held steady at 180. And of course, with that declining price, probably not going to see a lot of people racing to put on new natural gas wells. But we might have had enough of a bounce. I think we're up about 100 rigs in about a month and a half. And that may be enough to actually act like the control rods in the nuclear reactor of pricing that is crude. But in here, I see, someone asked me what I see in this one. I see the same kind of thing that I saw in gold and when I look at most of these oil charts, and that is lower highs and higher lows. And we're kind of getting into the same thing. I'll do the same thing with this one, which is draw a nice little triangle on this thing. To zoom in a little bit. Okay, tools, got that one. This one's a lot more subtle, but it's coming up from the bottom a little bit. So a lot of people call these pennants instead of triangles because they tend to be more pennant-y. Is that a word? More pennant-like a baseball pennant. This one's doing the same kind of thing. And again, until this breaks out one way or the other, I don't see a lot of reasons to start looking at it. But this would be great too. If you're bullish or bearish, generally the thing to do instead of getting whipsawed like gold has for a little while is to go ahead and just wait until they break out one way or the other. And why I like gold now and why I would wait on oil until you get some kind of break to one side or the other. So that would be it. Let's go to Sylvia from Tampa. How you doing, Sylvia?
Hey, Dave. I'm well, thank you. Dave, I need your opinion on Square, symbol SQ. And,
it's hip to be Square.
I'm long at 37.65.
Mm-hmm.
I need you to tell me if it closed right here and now, would you hold it over the weekend or do you think? I mean, or should I just exit?
You're down on a light volume. The reason this thing really came off hard was a little bit of the whole Silicon Valley technology thing, and a lot of people just saying that you won't need companies like this anymore because of Bitcoin. You want to hang on through the break?
Sure.
Okay, we'll be back in a minute. We'll wrap up the show today talking about Square. Like I said, it's hip to be Square if you're an 80s song. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
It's hip to be square. It's hip to be square. I like my bands in Minnesota.
And we're talking Square with Sylvia from Tampa. Still there?
Yep, I'm here, Dan.
Okay. Huge shorting in this the last 4 or 5 days, which is pretty good signal that this thing's ready to bounce. We talked about that in Intel this week. Same kind of thing. When everybody gets as bearish as they can, not a bad thing. My guess this is going to go to somewhere around 42, 42.50 for next Friday for expiration, looking at the options and looking at some other stuff. That's probably where this is. How long have you held it?
I've only had it for, what, two days? Yeah.
Okay.
That was
I
it.
think you're okay. The downside to this is everybody's Bitcoin, right? And saying the end of all credit cards. I've heard at least 11 times that PCs were going away. it's kind of an interesting thing. I kind of like Square. The reporting's been good. Was it a little overbaked when it went to $49? Probably. Is it a little underbaked now? Yes. I'd hold for around $42.50 next week, unless you see some kind of giant change in the market. But I think you're sitting right on top of a lot of support. It's Friday. You're down on light volume. People have been shorting the dickens out of this. If it just starts going up a little bit, I think you got $42.50 on this for next Friday. It's not a lot of money, but at the same time, I don't see a lot of risk in it either.
Okay. All right. Well, thank you, Dave. I appreciate it.
You're welcome. And, yeah, not a bad entry and everything. So I kind of like it. In the meantime, we're going to be talking with Tom O'Brien about technology at the bottom of next hour. That's 3:30 for you in Lutz, Florida. And we'll continue. Got some interesting stuff to talk about. So that's about it. Don't have time for anything else. But it's hip. In the meantime, snow when you can, not when you have to. And we'll see you Monday. Bright and shiny. Same bat now. Same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.